Hey, welcome. Today we're going to talk about something that is so deeply human, it affects pretty much all of us. Our decisions, our lives, and yeah, especially our finances. We're going to explore the real cost of holding on, and why sometimes the absolute smartest thing you can do is just let go.
Have you ever felt that? I mean, really felt it. That almost magnetic pull to just cling to something, even when your gut is screaming at you that it's time to move on. Of course you have. It's a universal feeling, and that's exactly what we're digging into today. And look, it shows up everywhere, right? We keep those old clothes tucked away in the closet, thinking, maybe one day. We stay in relationships or jobs way past their expiration date, just because we've already invested so much time and effort. It feels like walking away means it was all for nothing. But here's where it gets really interesting. This isn't just some random personality quirk. Nope. In the world of finance and investing, this tendency has a name, and it is an incredibly powerful force.
So let's talk about the science behind it. This is what's known as loss aversion. It's really the psychological engine that drives our resistance to letting go, especially when our money is on the line.
Okay, so what is loss aversion? Well, the brilliant minds of Daniel Kahneman and Amos Tversky figured this out, and it's a total game changer for understanding how we make decisions. It boils down to this. The emotional gut punch of a loss feels about twice as strong as the joy you get from an equal-sized gain. Think about that. We are literally hardwired to avoid pain more than we are to seek pleasure. And this chart just lays it out perfectly. Look at that. The pleasure you get from gaining $1,000? It's nice, right? We'll take it. But the psychological pain from losing that exact same amount? Whoa, it's double. It's this massive imbalance that causes us to make totally irrational choices, like clinging to a losing stock just to avoid feeling that amplified sting of defeat. So how does this actually play out in the real world with real money? Let's just walk through a quick, hypothetical story that shows just how destructive this bias can be to an investment. So it all starts with so much excitement, right? A great company, a fantastic story, a bright future. But then things start to go sideways. The market shifts, the stock drops, and what's the internal story? Oh, it's just temporary. It'll bounce back. Then real problems pop up. Bad news, issues with management. The loss gets deeper. And this right here is where loss aversion digs its claws in deep. The investor starts repeating that dangerous mantra, it's only a loss if I sell. It stops being about the investment and starts being about avoiding the pain of admitting a mistake. And then, years later, the truth is just too big to ignore.
And the final result of all that hope, of all that holding on, a devastating 90% loss. By the time they finally rip off the Band-Aid, the value has been practically erased. The very pain they were desperately trying to avoid becomes an overwhelming reality.
But here's the real kicker. The financial loss is only half the story. The true, hidden cost is all the lost time and all the lost opportunities. Every dollar and every bit of mental energy that was trapped in that failing idea could have been somewhere else, working for you. That is the true paralysis of loss aversion. So, how in the world do we fight back against a bias that's so hardwired into our brains? How do we break that emotional spell? Well, thankfully, there's a simple but incredibly powerful mental trick we can use.
This is the question. Just ask yourself this about anything you're stubbornly holding on to. If I had cash in my hand right now, instead of this stock, would I choose to buy this stock today at this price? For a failing investment, the answer is almost always a loud, crystal clear, no way. This one question is amazing because it just slices right through all the emotional baggage of the past and forces you to see the situation with fresh, logical eyes.
So, once you're armed with that amazing question, let's build out an actual toolkit. Here are 3 simple rules you can use to start moving on and making smarter, less emotional decisions. First up, cut your losses early. Now, this isn't about panicking every time a stock dips. It's about recognizing when the fundamental reason you bought it is broken. Remember, every day you wait, you're not just losing money, you're losing time. Second, you have to separate your ego from your portfolio. Your ego is a terrible financial advisor. Holding on just to avoid admitting you were wrong is a purely emotional move. The market doesn't care about your feelings, it rewards clear thinking. And finally, and this is maybe the most important, invest in your own decision-making. A loss is only a total failure if you learn nothing from it. Use these painful moments to build discipline and better rules for the future.
And, of course, this powerful lesson isn't just about stocks and bonds.
This idea, this wisdom, it applies to pretty much every corner of our lives.
So if there's one thing to take away from all this, it's this. Letting go isn't losing. It's choosing to stop paying the incredibly high cost of holding on. It means you're freeing up your capital, your time, your energy to invest in a better opportunity, or a better relationship, or just a better version of yourself. So I'll leave you with this question. What are you holding on to today that's keeping you from making space for something better?